Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into the financial world and come out with the juicy bits. Today we are unraveling BNB plus Corp, its latest quarterly report, and let me tell you there are some interesting shifts happening. This report is all about their performance from October to December of 2025, and it gives us a snapshot of where the company stands as it navigates a pretty significant pivot in its business strategy. If you like getting the real story behind the numbers and the strategies that shape companies, then make sure you are subscribed and consider joining our Discord community linked in the description below. Let's kick things off with a look at the company's financial foundation, the balance sheet, as of the 31st of December 2025 BNB plus Corp. Reported total assets of over $20 million. That is a massive jump from just under $4.5 million back in September 2025. What is driving this huge increase? Well, a big chunk of it is in digital assets. They now have over $7 million in digital assets and another almost $8 million in an investment in a digital asset trust. This clearly shows the company's new direction, focusing heavily on cryptocurrency and digital assets. It is a bold move, and it is significantly reshaping their balance sheet. On the more traditional side, their cash and cash equivalents also saw a healthy increase from around $1.6 million to over $2.4 million. This gives them a bit more breathing room for operations. Equity also saw a dramatic rise from about $2.3 million to over $18 million. A significant portion of this increase comes from additional paid-in capital, which reflects the money raised from issuing new shares or securities. You can see the numbers there, nearly $417 million in additional paid-in capital at the end of December compared to about $381 million in September. This shows they have been successful in raising capital for their new ventures. Now let's talk about how the company is performing financially, the income statement. For the 3 months ended the 31st of December 2025, total revenues were just over $500,000. This is actually a decrease from the previous year when they brought in close to $870,000. Product revenues saw a modest increase, going from about $495,000 to over $555,000. That is a good sign for their core product lines. However, service revenues dropped significantly from over $374,000 down to just over $10,000. This drastic decline in service revenue is a direct consequence of their strategic decision to wind down certain business segments. But the big story here, and the main reason for their current net loss, is the change in the value of their digital assets and investments. They reported a loss of over $1.7 million from the change in fair value of their digital assets, and another $3.4 million from their investment in a digital asset trust. Combined, these losses pushed their total operating expenses sky high to over $19 million. This resulted in a massive operating loss of over $18.7 million for the quarter. That is a stark contrast to the approximately $3 million operating loss in the same period last year. This difference highlights the significant impact of their new digital asset strategy, especially the volatility and accounting for these new types of assets. The company clearly recognizes this new strategy as the future and is investing heavily, which understandably comes with short-term financial pain due to market fluctuations. Looking at the equity statement, we see the dramatic impact of their capital raising activities. Over the 3 months leading up to the 31st of December 2025, their total equity skyrocketed from around $1.9 million to over $18 million. Much of this is driven by the issuance of new shares and warrants, which significantly boosted their additional paid-in capital. They issued tons of new shares and warrants, which is how they funded their new digital asset ventures. Notice how the total equity jumped from $12.5 million at the end of 2024 to just under $2 million in October 2025, and then catapulted to over $18 million by December 2025. This shows a very active period of financing and strategic adjustments occurring within those 3 months. Now let's talk cash flow. For the 3 months ended the 31st of December 2025, the company used about $5.5 million in operating activities. This is largely due to that massive net loss we just discussed, offset by some non-cash adjustments and changes in operating assets and liabilities. On the financing side, they brought in over $9.3 million. This came from a variety of sources, including the exercise of warrants and significant proceeds from issuing new common stock and pre-funded warrants. In their investing activities, they spent nearly $3 million on purchasing digital assets. This is directly in line with their stated strategy of accumulating BNB tokens. Overall, their cash bank accounts and other restricted cash holdings increased by about $776,000 during the quarter, ending at over $3.2 million. Given the scale of their new digital asset holdings and the investment in a digital asset trust, this increase in readily available cash is a positive sign for their short-term operational needs. The management is confident about their liquidity situation, projecting they have enough cash and liquid cryptocurrency to operate for the next 12 months. They view their digital assets and digital asset trust investments as longer-term holdings not immediately needed for working capital. This indicates a belief in the long-term value appreciation of their digital asset holdings. Their new strategy revolves around a digital asset treasury or DAT company that has adopted BNB, the native cryptocurrency of the Binance blockchain, as its primary reserve asset. They are using financing proceeds to strategically accumulate BNB and then use that BNB to generate yield through various DeFi opportunities on the Binance ecosystem. This is a very forward-thinking strategy and positions them at the forefront of companies exploring cryptocurrency as a core treasury asset. Alongside this new digital asset focus, they also have their Lineox subsidiary, which is working on producing nucleic acid solutions for the biopharmaceutical and diagnostics markets. They believe these solutions can be sold or licensed to third parties potentially at a later date. This dual strategy shows an attempt to diversify their business while capitalizing on the growing digital asset space. Looking at their segment reporting for the 3 months ended the 31st of December 2025, it is clear where the biggest financial impact is. The digital asset treasury segment reported a staggering operating loss of over $15 million. This is primarily due to the significant expenses associated with their new digital asset strategy, including the fair value losses on digital assets and investments, as well as substantial consulting expenses related to securing these new ventures. In contrast, their therapeutic DNA production services segment showed a loss of around $723,000, and their DNA tagging and security products segment had a loss of about $65,000. The consolidated loss before taxes for the quarter was over $18.6 million. This highlights how much the digital asset strategy is currently impacting the company's bottom line. The company is definitely making a significant bet on its BNB strategy and the associated financial volatility. It is also worth noting their discontinued operations. The MDX testing services segment has been reported separately, and for the 3 months ending the 31st of December 2024, it generated a net income of about $17,000. This segment was exited on the 27th of June 25, so its impact is now limited to historical reporting. Looking slightly beyond this reporting period, on the 2nd of February 2026, James Haft was appointed to the board of directors and received cash and stock options. This indicates continued board-level changes and compensation structures being put in place as the company evolves. Now let's talk about the internal controls. The company acknowledges a material weakness in internal control over financial reporting, mainly concerning the preparation and review of inputs for fair value calculations, especially related to warrant modifications. They are implementing a remediation plan to address this. This is a common challenge for companies navigating complex financial instruments and new asset classes like digital assets. The company is really doubling down on its BNB strategy. They believe it can generate yield through several methods like participation in the Binance launch pool, native staking on the Binance Smart Chain providing liquidity, and using BNB as collateral for DeFi strategies. They are actively accumulating BNB and building the framework for this. This is their core focus now, and they are optimistic about its potential. They are also looking to sell their OBNB trust units to buy more BNB, further fueling this strategy. The significant jump in selling general and administrative expenses by 420% to over $13 million for the quarter ending December 2025 is largely due to this digital asset pivot. They incurred substantial consulting expenses, including the fair value of warrants issued to consultants, which was close to $8.8 million. They also saw increases in payroll and stock-based compensation related to new grants. As for my take on BNB plus Corp, the company has made a very aggressive pivot towards digital assets with a clear focus on BNB and the Binance ecosystem. This is a high-risk, high-reward strategy. The massive increase in assets on their balance sheet and the corresponding equity growth from capital raises show a successful execution of their fundraising for this new direction. However, the substantial losses from fair value adjustments on their digital assets and investments are a direct reflection of the inherent volatility in this market and are significantly impacting their current profitability. Their ability to generate yield from their BNB strategy as outlined will be crucial for their long-term success. If they can master these DeFi strategies and navigate the regulatory landscape, their digital asset treasury could become a significant contributor to their financial health. The recent restructuring and workforce reduction show a commitment to optimizing costs to support this new venture. The material weakness in internal controls, while concerning, is not entirely unexpected given the complex and novel nature of their digital asset holdings. Their ability to remediate this will be important for investor confidence. In conclusion, BNB plus Corp is in a period of significant transformation. They are betting big on digital assets, and while the short-term financial results reflect the costs and volatility associated with this strategy, the company is clearly positioning itself for a future where digital assets play a central role in its treasury operations. The success of this strategy will ultimately determine the company's future performance. Alright, that is our breakdown of BNB plus Core latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.